Yesterday, Donald Trump's Truth Social flew with its own wings for the first time, following last week's successful merger with DWACU. Trump's media and technology group rose up to 60% under the ticker DJT before settling 16% higher at the end of the session, giving the day traders a nice swing. Reddit also saw some nice intraday volatility. The mother of meme stocks, GME, is also showing signs of life since the beginning of this week, but that appetite will likely rapidly fade after the share price tanked 15% in the after-hours trading, after earnings and revenue missed. Appetite for meme stocks and cryptocurrencies is back, and that's an important gauge for overall risk appetite. Traders are confident in the upcoming rate cuts. Robust growth doesn't scare as long as inflation continues to ease. And even the recent rise in inflation doesn't concern much, as it is believed to be temporary. As such, the Fed is expected to cut rates in June for the first time. Yesterday's 5-year bond auction in the US saw strong demand, and the S&P 500 retreated slightly from an ATH. The collapse of the Baltimore Bridge dampened the mood for some companies that will see their trade routes distorted. The most concerned are automakers' transport of coal, gasoline and grains will also be disturbed. But if all goes well, the S&P 500 is set to print a 5th consecutive monthly gain, a thing that has not happened since 2013. The major risk to the rally is a renewed pullback of Federal Reserve cut expectations and/or a possible deterioration in earnings expectations. What's also interesting regarding the Fed's rate cut expectations is that the expectation of 3 rate cuts is intact, but if and only if the first rate cut happens by summer. Many investors think that if the Fed doesn't cut by June or July, there won't be any cut this year. So, it's 3 cuts or none. In the base case scenario of 3 cuts, the stock rally is expected to broaden beyond technology. The S&P 500 equal index is expected to catch up with the normal weighted index. Interest should also broaden in favor of small and mid-cap stocks, and commodities like gold, copper and oil.